Good afternoon, ladies and gentlemen. This is Josh Horton here with Pinnacle Financial Services. And as always, want to thank you guys for taking some time out of your busy day rather, to meet with us, to do some training. And so for today's topic, we're excited to talk about, can your client's retirement survive a storm? And we'll kind of go through what that means and some solutions for potential market downturns in the future here. So again, my name is Josh Horton. I'm the sales director for our life, annuity, and long-term care department here over at Pinnacle Financial. So if you haven't spoken to me in the past, you can feel free to reach out to me with anything related to those topics. There's my direct extension below. So anything life insurance, annuities, long-term care, give me a call there. And if you're not already working with Pinnacle Financial Services, just a couple housekeeping items and a couple things about us. So your phones are on mute. Just to keep down on some of the background noise. If you have questions as we go through, just type those into the question box, and I'll be happy to get to those questions, probably most likely at the end of the presentation. We kind of have a lot to cover here today. So, but just a little bit about us. We're a national brokerage firm, IMO, FMO, if you will. That's kind of whatever the insurance company wants to call us. But we're really your partner as an agent, as an advisor. And we'll talk more about what we offer to our agents and really how we help support your business and help you grow your business as we go through. So probably try to keep it to under an hour today for again, just respecting everybody's time. We got a lot of info to cover, so I'm going to kind of jump right into to our topic. So again, it's this idea of a retirement storm and what do we do? So if maybe you have clients in that retirement space, in that senior market, if you will. Maybe some of those clients, or maybe it's your family members or loved ones or yourself, might have most of their retirement assets invested in the market, or a good portion of those assets in the market. And is it right? Is it a sound plan? Have they reevaluated their risk tolerance now versus the way it was 30 years ago, 20 years ago? So that's all stuff that we'll touch on. Perhaps you're concerned about a market downturn or fluctuations due to economic factors. We know that we've seen one of the longest bull runs in history with our markets. We know that we have another presidential election coming, and these are things that really factor into the way the markets perform and the way people's investments do. So it's really a time to be looking at that stuff, and it's an awesome time to be talking to clients about a safe money solution. And a lot of what we do here at Pinnacle involves annuity products, fixed and fixed indexed annuities. So for today, we want to talk to you about ways to not leave money on the table, ways we can help you grow your business by incorporating annuities as a safe money solution. And so we'll kind of jump in to that and with a little bit of an agenda to give you guys what to expect today. I mentioned we'll talk about working with Pinnacle, what that looks like, and what we provide. We will show you the safe money strategy, the fixed indexed annuity and fixed annuity, and how those work and how that comes into play. Conceptual selling. We'll go through some language and some talking points, some information that you can share with clients to help get the concept across. And that's really what's the most important thing when we're talking to people about, risk tolerance and should you carve some money out of what you have invested and put it somewhere safer and all these different things that we'll talk about today. Product examples. So what's hot? What are our agents selling? And we'll show you examples of that. Suitability is an ever-changing, fluid, kind of a moving target. So I tell our agents that's sort of the underwriting for the annuity sale. We'll hit on things that have been changing with that and ways we can help you there. And very exciting, today we will talk about our brand new annuity quoting system. So on the annuity and life team, we're super excited to have this. Not only does this make our lives a lot easier, but also for you, our agents, we're making this available to every one of you. So we'll show you how to use it, where it is. We're kind of going to go through it very briefly for today's sake. So we'll probably do another more in-depth training on how to use the quoting system. And of course, if you want a one-on-one training on that, we're happy to talk anytime. So, but we'll show you that. And then last but not least, we'll talk about prospecting, right? That's probably the hardest part of our job. So we always kind of need to be prospecting. At least that's what I learned early on in the business. Prospect like you breathe, if you will. You want to be always sort of prospecting if you're an insurance or a financial advisor. All right, so working with Pinnacle Financial, and if you're already with us, just a little bit of a review here, so apologize, but we're a national brokerage. FMO, IMO is a term that some different insurance companies might use, but we're really a partner for our agents. We really think of ourselves as an extension of your office, and we are here to really facilitate making your life easier. We want to try to make your business flow smoothly, take a lot of the busy work off of your plate so that you can be out there in the field, seeing clients, setting new appointments, doing marketing activities, and leave a lot of that paper pushing and busy work to us. If you're sitting on the phone with an insurance company for a half hour or some other financial institution, transferring company, hey, don't do that. Work with Pinnacle. We'll do that kind of stuff for you. Let us know what's going on, and we will sit on hold and we'll call the insurance company, and we'll dig in more on that and how our team works to track new business and that kind of thing. But we have experts that specialize on all the different areas here at Pinnacle, so that you don't have to be an expert in life insurance or an expert in annuities. If you're working with us, we'll help you get geared up to go and make a presentation, answer any questions that you have. You can really rely on us. We have hundreds of years of experience collectively here in the walls at Pinnacle, between our sales directors and our executive team. So that's where we'll really come in to specialize in our different areas. And that's how we have the separate departments. We have the life, annuity, long-term care department, and then the Medicare, Med Advantage, and Med Sup handled by our health, our Medicare department. The tools that we offer, I mentioned the annuity quoting tool we'll show you today. There's a lot of other stuff on our website for quoting life, long-term care, Medicare. And of course, top-level commissions. I always want to mention that if you're not already working with us and you do decide to come and work with us and partner with us, you can expect to receive direct commissions. You're not being paid by Pinnacle. We're not a career agency. We're not going to ask that you do all of your business with Pinnacle Financial, but you will be receiving those direct commissions paid out by the carrier and top-level commissions at that. We're very transparent with the commission levels. We can send you the schedules. You can see what you're going to get paid. And there's some real value in that in our crazy world in the insurance business today with technology and all the different outfits that are there. So it's important to bring that up on every presentation. You can expect top-level direct commissions working with us. I always tell everybody, bring the information to us and we'll help you build the case design. You don't have to be an expert on the retirement space, the annuity sale, in order to get some of that business. Don't walk away from the business. If you're comfortable enough and confident enough to have a basic conversation with a prospect about their retirement assets, get some of their information, what their objective is, what they're looking to accomplish, bring that back to us, and we will help you pick the right product. Whether it's an annuity or maybe it's not an annuity, we'll be the first to tell you, and then determine which annuity or life policy, or maybe it's a hybrid long-term care case. We'll help you pick the solution that fits the client the best. You'll receive training, help with illustrations. We'll actually be able to show you how to do illustrations yourself if you like that, if you want to be able to have those capabilities. But you can certainly also rely on us entirely. A lot of our agents, rely on us to do all of their illustrations, and we love that. We run illustrations for agents here in the office all day long. But a big thing in working with us that a lot of our advisors experience is an increase in production. So we can really help you maximize your closing ratio. We've seen what works, kind of what doesn't work. So we find that most of our advisors report somewhere between a 20 and 40% increase in their business after they start working with us. Actually, that's a statistic that comes from the insurance carriers and compared us to a lot of the other brokerages out there. And they find that advisors that have been contracted with them in the past start working with us and are able to increase their production, which is it's hard to argue with facts and statistics, as they say. So from this picture, yeah, submitting annuity business can be a little bit overwhelming in 2019. So don't let that be a deterrent, because we will help you with it. And we're here to walk you through step by step. If you're submitting annuity business, there's state CE training that's required. Every state has it at this point. So a lot of the states incorporated it in the last couple of years. So, let us know if you're not sure. We'll help you find out. We can look you up and look up your CE transcript. We could send you the courses that you need to do. But even if you're somebody that maybe did annuities, 10 years ago, 5 years ago, you may still not be compliant with the very specific, it's a 4-hour annuity CE course that's required by every state at this point. Also, product training is a big thing that every company has. And a lot of times agents get worried about it because some of the training modules, especially for the Medicare, are very extensive. These product training modules for the annuity companies are very easy. A lot of times it's maybe you have to open a PDF file and then click a box and say that you read it. It's very simple. But those are hoops that you must jump through to write annuity business, and we'll help you through the hoops. Same thing with the suitability debacle. If you're not sure about suitability and whether an annuity is right for your client, we can run that info by the insurance carrier, and we'll help you through the application. That's really the important thing here. You'll find the annuity applications become longer and longer. Same with really all the applications. They seem like they continue to get longer. So if you're not sure how to fill that out, we have folks here in the office. I have an entire staff, new business administrative team that is solely devoted to helping our agents on the life and annuity business filling out the application. So they'll be able to walk you through step by step through the app if you need that. Or if you want to do an electronic submission, many of the companies offer that these days. So we can help facilitate that also. But once the business goes into the company, my new business folks are tracking those cases. They're following up every day. They're making sure that there are no additional requirements. If there's a transfer of funds, they're asking the insurance companies to follow up on the transfer of funds. So they really, as I said, they're really an extension of your office, and that's the way that all of our agents really see our staff here. We're just right here in the Philadelphia area. So wherever you are, if you're working with us, you have a virtual back office here in Warminster, Pennsylvania. All right, so moving right along, we're going to jump into some of the content, technical content here, and I mentioned a lot of what we do for our safe money sales for our clients is involving annuity products or fixed indexed annuity. So what is a fixed indexed annuity? Big common misconception is that you need a securities license to sell indexed annuities. You do not. It is a fixed annuity. All you need is a life insurance license to sell fixed indexed annuities. The one thing that people kind of get hung up on sometimes is the indexing, and we'll go through how the indexing strategies work in a little bit more detail. But generally speaking, the indexing is really just a measurement tool that the insurance company uses to calculate how much interest they pay your client in their fixed annuity. So for this, we're showing how they're showing the S&P, which is probably the widest used index for the annuity products. It's the one that we have the most historical data and the one that a lot of agents gravitate towards. So if you have an annuity that's tracking with the S&P, when the S&P goes up, the insurance company will pay interest to your client into their annuity. If the S&P goes down, the client won't lose any money. You might say, how can you do that? It's because when the index goes up, the insurance company is only sharing part of that interest with the client. They're paying some of that interest into the client's annuity, and they're keeping some of the interest, so that when the market goes down, they're not transferring any of that loss to the client. So the insurance company is kind of taking on all the risk, so that when the market goes up, they're not going to give you all the gain. but it's sort of an even trade-off, and that's kind of how we want to coach our clients with an indexed annuity. No going in, you'll never lose a penny. Zero is your hero, as they say, is kind of a term that's used in the annuity world. Never lose a penny if the market goes down, but if the market goes up, you'll earn some nice interest. You'll earn better interest than you'd earn in most other fixed investments, but you'll have that peace of mind that if there's a catastrophe, you won't lose your retirement money. Guaranteed lifetime income is another bullet point there, because we find a lot of our indexed annuity sales involve a lifetime income rider, more than half. And we'll talk about why that is, and really the fear that people have about outliving their assets, and how many people don't have guaranteed lifetime income set up through their retirement package. They don't have pensions, and so that's a big part of the annuity sale with a lot of our regular clients out there in the States today. All right, so conceptual selling is a big thing. It's important to keep things conceptual with clients a lot of times with annuities, because we don't want to get them confused. We don't want them to be lost in the weeds. And the concept of making sure your money's safe and giving you some nice interest when things go well is really the main point. So we have a couple of different satellite offices here. Pinnacle Financial has an office in the Midwest. We have an office in Vegas. And so we have a ton of agents out there. That's kind of why we parked that office in Las Vegas. We wanted to relate to them and kind of came up with this analogy of comparing indexed annuities to blackjack. So just imagine, if you're playing blackjack, if you've ever gambled, played blackjack in its simplest form, you bet $10, let's say, for example, and what if you win? You're gonna win your $10. If you lose, though, you're gonna lose your $10. Right? It's pretty straightforward. What if there was a retirement casino? Not much most casinos anymore really are. A lot of retirees in there. But if it was an indexed blackjack table, for example, and with this indexed blackjack table, if you bet your $10 and you win, let's say maybe you're only going to win $3, $4, or $5. But if you lose, you're not going to lose your $10. They'll give you your $10 back and they'll let you play again. That's kind of the way an indexed annuity works. If with an indexed annuity, you're not going to earn 10, 11, 12% interest in your indexed annuity, most likely. You're most likely going to earn more like 4, 5%, maybe 6% interest, but you will never lose a penny. If the market goes down 20%, you'll keep all the interest that you've earned in your annuity up until that point, won't lose a penny. So if you ask your clients, which blackjack game they'd be more comfortable playing, the regular blackjack or the index blackjack, I think most people in retirement would probably say the index blackjack, right? I'll take the $3 or $4 or $5 in winnings and know that I'll never lose. So that's kind of a way to relate to an indexed annuity. And this slide just sort of takes it the next step and really illustrates that. So the power of the indexed annuity is shown here. You can see that blue up and down squiggly line. That's the actual S&P. So that really shows the true volatility of the market. You can see 2003 recession, 2008, 2009 recession, and those are times when a lot of people in America lost a lot of money in retirement accounts. But you can also see the green line, which is your indexed annuity. And this is a piece by North American. They do a lot of great pieces like this. It's one of our premier partner carriers that we do a lot of our annuity and life business with. But you can see that green line, client put $100,000 in, and in those years where the market had a downturn, they didn't earn any interest, but they didn't lose any money. So if they had a neighbor down the street that had money in the market, they might have lost a lot of money in those years, right? Now the neighbor earned some interest back, for example, when the market came back up, but so did the person with the indexed annuity. As you can see, the green staircase goes up to 2008 recession. You see a big drastic downturn again in the market. Your indexed annuity stays strong. Zero is your hero, right? That client didn't lose any money. And then when the market had its return, as I mentioned, our longest bull run in history, we see the client with the indexed annuity continue to earn interest. Really great piece that we always send out to agents after these calls, and So if anybody would like that piece, I can share that with you. More statistics, just more conceptual language. This is just some data that really shows a mistake that's being made by a lot of Americans, I think. We have a TIAA-CREF survey that said 84% of Americans want guaranteed monthly income in retirement. We talked about how the income rider is a big part of a lot of these annuity sales. But only 14% have actually bought an annuity. So if you look at the whole country, there's not as many there's a lot of opportunity for the annuity sale out there. You can see the average CD rates on the right. Now we got to update this number, but I know that the rates really haven't changed that much, so it's not that important to update. The point is the CDs, maybe you get 2.5% in a CD today. People are still putting a ton of money in CDs though. And they're not doing it because of that 2.5% interest rate, right? They're doing it because it's a safe place they can park their money. They know they won't lose a dime, and they don't know about another alternative that they might be able to get a better interest rate than that. Fixed indexed annuity would be perfect. You can definitely earn more than 2.5% interest in your fixed indexed annuity, but it's also tax deferred growth, which is important to note, where your CD is not. You're paying taxes on that CD growth, where you're not paying taxes year by year on the growth in your tax-deferred indexed annuity. Also, back to the 84% of Americans wanting monthly income. I mean, people want a safe place to put their money. They want monthly income, guaranteed income in retirement. So really what that says to me is they're open to an annuity. They're telling me everything that an annuity would potentially provide for them. But many of these folks just don't know that. When they hear annuity, they think of the J.G. Wentworth commercial. They think of their parents had an annuity. It was an immediate annuity, and it had no cash value, and they needed money, and they couldn't get any money out of the annuity. All they could get was a payout. There's just all these horror stories. So they're not going to tell you that they want to buy an indexed annuity with an income rider, but maybe that's the exact perfect solution for your client. So just things to think about. And when we're thinking about retirement versus, then versus now, people are super worried about outliving their assets. This MarketWatch survey, Transamerica survey, it's basically saying that people in retirement are actually more worried about outliving their assets than they are about actually dying. They're more worried about running out of money than they are about dying itself. Crazy. And the reason for that is because people don't have guaranteed income in retirement today. The pensions and these guaranteed income plans are really few and far in between. The days of somebody working one job their whole career, retiring with a pension, I mean, how many people have that? Most people are relying on their own personal assets, the 401k, the IRA, the SEP IRA, and they're saving this money for themselves as much as they can. So how do we know how much we can spend? Well, we don't know when we're going to die. So it's a big debacle that a lot of people have. If they've saved, $500,000 for retirement, is that enough? Well, how much can I spend? It's really tough to figure out for a lot of folks. And that's why the guaranteed lifetime income income rider is a big part of a lot of these annuity sales. Clients can put that big IRA, that 401k, that $500,000 that they save for retirement into a safe haven that will provide them with a guaranteed lifetime income. So here you go. About 60% of all the annuities that we see sold across the country involve this income rider. So it's important to note with this, if you're talking about an income rider on an indexed annuity, this is not an immediate annuity. This is not an annuitization. In the old days, they didn't have these income riders. So if people wanted an income from a deferred growth annuity, what they would have to do is annuitize it, quote unquote, or basically turn it into an immediate annuity where, you have $100,000 in the annuity. Now you need an income stream. Okay, I'm going to give this $100,000 to you, Mr. Insurance Man, or the insurance company, and then the insurance company is going to send me a check for the rest of my life. But that $100,000 is the insurance company's money now. And there's no cash value, there's no surrender value with those immediate annuities or those annuitization payouts. And that's why we had those J.G. Wentworth commercials with people singing about, having an annuity and needing money now. And, so that's not what we're talking about here today. It's important to make that distinction. What we're talking about today is a deferred indexed annuity that has a built-in lifetime income feature. So we'll show you how these work with a couple of examples, but it gives the clients the ability to start receiving a lifetime guaranteed level income payout while the rest of the money that they put in that annuity is still their money. It's still in the account, and as they spend money down, there'll be less money in the account, but it gives them the remaining control over the asset, the balance of that asset as they're receiving their lifetime income. It's a very big distinction to make with annuity products, and a big misconception that's made by a lot of agents. This is just giving you some conceptual stuff, some stuff that we've picked up over the years. This is a financial advising 101, just, kind of a zing phrase you could use. The rule of 100. So, you take somebody's age, subtract it from 100, the remaining balance is the approximate percentage of their overall portfolio that should be invested in the market. And this is, this isn't the writing in stone here, but just kind of a general rule of thumb. So if you have somebody who's 65 and they have a big IRA and a lot of it's invested in the market, you might say, hey, Mr. or Mrs. Client, have you heard of the rule of 100? Because by the rule of 100, if I subtract your age from 100, really only 35% of this IRA should be invested. Maybe we should carve some of this money out and look at putting it into an indexed annuity, for example. So when we're talking about the indexed crediting strategies with these products, this is one thing that a lot of folks can get lost in the weeds with. So, if you want to talk about how these work in more detail, we can talk another time offline. I'm just going to kind of go through these real briefly just to give you an idea of how some of the basic ones work. Pretty much every indexed annuity will have a fixed bucket. So some fixed account, you can choose where you'll get a guaranteed interest rate. It's not indexing. And then they pretty much everyone will also have an annual point-to-point capped strategy, which we'll show you, and then the uncapped strategies, which are ever more popular. And we have a lot of awesome uncapped indexing strategies out there, but they all kind of have a different way that they calculate how much interest they pay your client. So here's just an example of a capped annual point-to-point strategy. So what they do is they're looking at the percentage change in that index from only 2 points in the year. The first day in the year, the day you buy that annuity, and then so where the index is the day you bought your annuity, August 8th, 2019, and then where that index is that same day next year, August 8th, 2020. So based on the percentage change in the index, they'll use some measurement with how to calculate how much interest to pay your client. So here, the measurement is a 5% cap. 10% index change for our example is what we're showing. We're using an S&P 500 example. Hypothetically speaking, the S&P had a 10% change in index for this year, right? So if that were to take place, this client would have earned a 5% interest in their indexed annuity. The cap or ceiling for this strategy is 5%. This is 100% participation, so you're getting 100% of the interest earned up to 5%. The same scenario, same indexing strategy. Let's say the index only went up 4 points. Well, the client would get all 4 points. It's 100% participation up to 5%. Pretty simple. Remember, if this index went down 10 points, right, the client wouldn't lose any money. So that's really just kind of important to keep hammering that home for those of you that might be new to the indexing strategies. And if this is a review, I apologize. We'll run through this, and then I'm going to jump into some really exciting stuff with the quoting and so forth. So here's an uncapped strategy, and I say uncapped is not unlimited because just going back to that gambling analogy, there's really always some way that the insurance company is going to keep some of the house, right? They're taking on all of the risk if the market takes a dive. So for that reason, they're not going to give all of the interest to the client either. They have to make some money, right? So here in this example, we're showing an uncapped strategy with a reduced participation rate. So the last strategy had a cap rate with 100% participation. This does not have a cap, uncapped, but the participation rate is reduced to 70%. So for the same example of index change, we see the client would earn 7%, 10 points. The index goes up 10 points. They get 70% of that. They would earn 7%. Now, I also have a spread listed here, not to confuse you guys, but so you won't normally see the reduced participation rate and what they call a spread or a margin used in the same strategy. It'll usually be one or the other, and you'll see that used with these uncapped indexing strategies, again, as a way to keep some of the house. So the spread would be, it's not a fee, it's only charged if there's actually interest earned in the account. But if this example, if they did have a reduced participation rate and a 1% spread, they would get 7% based on the participation, take the 1% spread off, client would get 6. So that's very briefly kind of how some of those strategies work. And there's a lot of different options, a lot of different uncapped indexing strategies out there. So I always say it's important not to get too caught up with that stuff, because at the end of the day, no matter what strategy that you pick, with most of the good products, I mean, some of the products have really poor strategies and we wouldn't be recommending them for people looking to grow their assets. But for most of the good strategies, you can expect that you're going to get around, the 5% interest or so. And it's tough to say that one strategy is going to be the best. So here's an example of one of the top income rider products that we've sold. This product has been around for probably about 5 years at this point, and it's still very competitive. So it's kind of tried and true. It's North American, their benefit solutions. This is a company we really love working with. We do a lot of life business with them, also annuity business. And they have this product is one of the best for clients that are going to start income right away. So as I mentioned, I run these spreadsheets, these quotes for agents every day, and I run a lot of comparisons with products like this for clients that know that they're needing to start income. Hey, we're retiring in 6 months. We're going to start income then. So pretty much right away, which product is the best. And this one just tends to always pop up as one of the best options. Reason being, they have a 20% bonus to the income rider day one. And there's a few products that we have like this. Global Atlantic has one like it. This one also has a death benefit enhancement and a nursing home doubler. So they'll double the income payments if the client is confined to a nursing home. Sort of a Swiss Army knife type product there. It's an indexed annuity. The money, you just park the money in there, it'll grow with the index. If you need it for income, you can turn on the income. You'll receive a guaranteed lifetime income payout. And then if you get sick, they'll actually double that money for you. Or if you passed away, the 20% bonus that's paid in the first year would be paid out as a death benefit. So really kind of give you some different utilization for this product in different ways that we've sold it. Here's another option, not an income rider option. And I know you guys probably can't see these illustrations, so it's really just to kind of show you sort of what they look like, and I can give you the basics of the bullet points. Which with this one you can kind of see on the left hand side. This is Athene, their Performance Elite annuity. This is different than the North American product I just showed. This does not have an income rider. This is a growth annuity. And this one has a 9% premium bonus, the way that we've illustrated it here. There's a few different options with this product. You can sell it with or without the bonus. We also have it shown with a fourth year return of premium here. So some extra liquidity provisions. If you have folks that are worried about being able to take money out of the annuity during the surrender charge period, that this product has that built in that you can add. So that's another important thing to touch on. All annuity products, for the most part, have some form of a surrender charge period. These are generally more conservative, longer-term investment products. So they're designed for you to keep the money in there for a 5-10 year period of time. All the ones I've shown you so far have a 10-year surrender charge period. So you put the money in there, and then maybe in the first year your surrender charge is 10%. Year 2, it's 9. Year 3, it's 8. 7, 6, and it reduces as time goes on. But oftentimes clients are wary about an emergency, or that just like the idea of being able to cash that annuity in and waive the surrender charges if they need to. And that's what that return of premium provision would provide. So that's an option that we have. We have several options that have that return of premium, this being one. But that's really, this product is really just an awesome growth annuity, uncapped indexing with the S&P that's showing here. And they have several great uncapped indexing strategies with this product that all are illustrating somewhere around, say, 6%, give or take, on the hypothetical illustrations. So another great thing to kind of just touch on with these illustrations, we didn't always used to have illustration capabilities like we do today. That really is just makes our life so much easier, where you can show a client one of these indexed annuities illustrations, and it's not guaranteed that they'll get 6%, right? But it's indexed. It's going to depend on how the index does. It's guaranteed you won't lose any money, right? But what you can show them is this 6% is based off actual historical performance. This is based on back testing with this actual index. Like, if somebody bought this annuity 10 years ago, this is exactly what they would have earned, right? So it's easy to show them those scenarios, and also many of these illustrations most of them will show you, here's the best 10-year scenario, here's the worst 10-year scenario, and then here's the average of the last 20 years, for example. And a lot of the times when they show you those different scenarios, they're very close in the interest rate. So maybe the best 10 years did 7% interest, and the worst 10 years was 5.5%. So you'll be somewhere between probably 6 and 7% interest, or 5 and 7, or and that's really what you're looking for. It could be worse than that, could be better than that. I have a couple clients with a very similar product like this that have earned about 6% the last couple of years. So pretty accurate to the illustration there. So that's kind of one of the growth options. And I'm sort of moving fast with the sake of everybody's time, so apologize for that. And if there's questions that you have, jot them down. If there's clients that come to mind, prospects that come to mind, by all means, write their names down, and we can chat about them offline. This is a little bit of a different spin. This is a non-indexed product, but I wanted to show you guys this one because it's really it's a hot product. A lot of agents sell this, and it's probably the best annuity that we have for long-term care planning. This is Global Atlantic, another A-rated company, and this is a fixed annuity with a really robust long-term care enhancement. They will triple your account value for long-term care with this annuity. So there's a couple of health questions on the application, simplified underwriting. They have two risk classes. They have a premier rating most people qualify for, which is the 3 times the benefit. And then if you're not quite as healthy, a couple health issues, you might qualify for their standard rate, which in that case, they would double the account value for long-term care. But figure you have a client that puts $100,000 into this annuity and they have a long-term care claim. Global Atlantic will turn around and pay them out $300,000 tax-free. The benefit is tax-free. So this is really kind of more of an asset-based long-term care plan, if you will. 2.75% fixed rate, annual renewable. That's not really anything to write home about there. That's not why most likely your client would buy this annuity. This is more for the folks that maybe they're interested in insuring against the risk of long-term care, but perhaps they don't think they'll qualify for traditional long-term care. Maybe they just don't like the idea of paying a hefty premium for long-term care and running the risk of never using the policy. And also, they would have to be somebody for this product, the Global Atlantic, that has some assets. So if they meet those criteria, they may prefer, hey, I'd rather move some money from my one pocket to the other, move $100,000, put it into this annuity. It's still my money. It's still sitting there. It'll earn interest. But if I get sick, let the insurance company pay for a good portion of my long-term care expenses. So this is a big selling product. And we have a lot of annuities like this, life insurance products like this in that hybrid long-term care space. So that's kind of why I wanted to just show you guys an example of how an annuity can be used, in that way as well. All right, suitability. This is a lot of my agents call them the anti-commission department. It's kind of the underwriting for annuities, as I mentioned before. And this is something that's changing It's sort of a moving target, and we are always, ear to the ground on suitability, finding out new stuff for you. We're kind of have to be experts on the different suitability guidelines here at Pinnacle. So if you have somebody that you think might be a candidate for an annuity, maybe you're not sure if an annuity is suitable for them, we have pre-suitability forms that you can fill out. This is one that Global Atlantic has. Most companies have this. If not, we can get their information and sort of run it by the suitability team at that carrier, and they'll let us know if the case sounds suitable or not. So there's a lot of things to avoid with suitability or to watch out for today. Things like, you can't put all or too much of someone's overall assets into an annuity with surrender charges, right? So we're not proposing that you park all of your clients' retirement nest egg into an indexed annuity, but maybe a portion of those assets. Maybe if they carve out half or a third of their IRA and put that into the indexed annuity product. That's the kind of thing we're talking about. So, if you're proposing too much money, too much of their overall nest egg, insurance company might raise a red flag. The annuity has to meet the client's objectives. So if they're saying they need income all over the application and it's not an income product, they might raise a red flag. So this is all stuff that can be a little bit overwhelming if you're new to annuities, but it's really everyday stuff for us. So let us help you there with suitability. All right, so this is our brand new annuity quoting tool. I want to jump in and show you guys this. That's the link actually. So we're going to put this on our website. So you'll be able to access this directly through the Pinnacle website, but then I can also send this link to you, which is awesome. So you can actually have this, set it up where you can save it as a favorite. You can have this as a separate page on your desktop where you'll have your own username and login and be able to run your own annuity quotes for the first time here with us at Pinnacle. So apologize up front because it's not going to move very quickly with the internet in here in our conference room. So I already put together a comparison. I'll show you guys, but this is just sort of what it looks like on the surface. Oh look, I actually have some examples here that I ran from before. So I put in a 65-year-old person in Arizona. Get a lot of retirees in Arizona, right? They had a nice $200,000 in an IRA for this example, and with this quoting tool, this is the income rider quoting tool here. So you'll go over to riders and then income rider. Let me actually back up and see if this will let me back up. All right, so we have a male, 65 in Arizona, 200,000, and let me refresh it. I want to show you guys that you can pick when you want to start income. So this is something that will save you a ton of time if you're in the annuity world. Let's say, for example, this example, we had this 65-year-old client. They have 200,000 in an IRA, but they don't need income until they're 70. They know that this IRA, it's required that they start taking money out at 70 and a half. So I'm just using this hypothetical example. That's when they're planning on starting income in 5 years. So we have a 65-year-old person. You can see, you can stipulate. So this is going to find me the best income rider product if the client wants to start income immediately, year 3. Like for this example, we said 5 years. And we can run the quote. So I ran one over here if this takes forever, but I wanted to show you guys kind of how to enter some of this stuff in here. And it will show you the top options and exactly what their income rider payouts will be in the 5th year. And a lot of these income riders, the payouts are guaranteed, right? So how they work is, here you go, Global Atlantic, the first option that shows up, and their income rider grows by 10% per year. That's what this roll-up rate is. So what that means is your client puts money into this annuity, and if they don't start income right away, their pool of money that's going to generate those income payments is growing by 10% guaranteed every year. So this is independent from the indexing. It's a little bit more complicated, but it's just a way that they're calculating the lifetime income, which for this example is $18,000 a year at age 70. So you're putting your 200,000 in, starting income in a few years, and receiving that guaranteed pension, or guaranteed paycheck for life. I did a couple of examples here earlier where just to show you how you can put together a proposal in here from this software. So it will put your client's name. You can put your name here as the agent. Tells you the different products that are being compared. Gives you an overview on the basics. But then it will actually show you a ledger of what the payouts are in any given year. If you wait 5 years, how much you'll be receiving, and also will show you if you wait further, if you wait more years, because again, that income rider example grows 10% every year. So the longer they wait, the higher their annual income payments would be. So, if they waited 10 years, they'd be receiving $27,000 a year for life from this income rider. Pretty awesome stuff there. So I know it's really probably tough for you guys to see. For the sake of today's presentation, I really just wanted to let you all know that we have this. This is really exciting stuff. It'll save me a ton of time, save you guys a ton of time. All of the fixed annuity rates are on here, so you can quote all the top fixed annuity rates, guaranteed fixed annuities, non-indexed products. Those rates are always changing. So if you're not sure, hey, who's got the best 3-year fixed annuity? You can look on here. If you're doing business in a different state, you have a brother in Connecticut, and Connecticut has some weird rates. You can go and look for Connecticut rates, put in the amount of premium that it is. Sometimes that makes a difference with your fixed annuities. They may have a high band and a low band. So that's all right here. Boom. Instantly show you the best rates. And so I use this a lot of times for finding the right product based on what the client's looking for. And then we can run the full illustrations for that product and make it look real pretty so you can go out and make a presentation. So you can quote the fixed annuities. You can quote the indexed annuities in here. It's not going to show you a full-blown illustration like the examples that I showed, but it will show you all the details with that product. If there's a bonus up front, what the rates look like, if there's a minimum premium, it'll show you the rating of the company, max issue ages, all that good stuff. So that's kind of the big deal there with the quoting software. So take me back to the beginning. That's great. All right, so that's kind of the quoting tool. If you guys, obviously everybody on the call today will send that to you. So we'll send you the link, and you can get in there. You can run quotes. But if you have more questions, if you would like to go through a one-on-one tutorial with that, give me a call. Happy to do it. We'll definitely be doing a follow-up training to today's training on the quoting engine itself. So we'll go way more into detail with that because I know that was really just kind of brief, and it's hard to show you on the fly with that. So last but not least, I told you I'd kind of try to keep it to under an hour. So we'll wrap up with prospecting because, hey, look, it's probably the hardest thing that we have to do. Find new clients, get in front of new people. So we wouldn't be doing our job here at Pinnacle if we didn't help you guys with the prospecting stuff as well and marketing. So I will say that from my experience in 10 years in this business and with the most successful agents that I deal with every day, the most successful guys are doing multiple different prospecting approaches. They have, that multi-burner approach going. They're doing Medicare to get in front of new people. They're doing some type of community events. They're getting referrals from their existing clients. They're talking to their warm market, and they're also buying leads, but a lot of times the leads are really looked at as a way to supplement all these other things that you're doing, so just kind of giving you that because the leads, sometimes it's like if you rely on the leads and then for whatever reason, 1 month you got the leads that you got, none of them panned out. It's tough when you don't have anything else to get business into your funnel. But with that said, with respect to annuity leads, we have the absolute best thing that we've seen right now for prospecting for annuities. And that's from, as I mentioned, my 10 years experience in the business and the collected, hundreds of years of experience between our executive team and our sales directors. We have a couple of different lead companies right now that you can buy highly qualified exclusive annuity leads, per piece leads, where these are people that are ready to buy annuities. The leads couldn't be any better than the type of leads that we're getting. And the reason that they're so good is because the companies that are providing these leads source the information from many different sources, online, social media marketing, all kinds of different stuff. But then they have marketers, they have salespeople like myself that actually call these prospects and vet them over the phone. So if it's a lead that you're getting through one of these, they're third-party companies that we use. We can send you all the information on the companies. But if you're getting leads through one of these programs, it's somebody who's agreed to talk to an insurance agent or a financial advisor about an annuity. They're totally clear about being open to speaking about an annuity, and they have to have assets. So you can set the different assets, but I will say that the average sale that we get from these lead companies is higher than our average annuity sale that we see across the country as a whole. So, an example of a lead from this may be, Mr. and Mrs. Smith, they have $500,000 in retirement assets. Mr. Smith is already retired, but Mrs. Smith is retiring this year, and they're interested in something to provide lifetime income. It's just like it couldn't be a better lead. It's like a dream lead. And so we're really happy to have come across this program a couple of years ago, been using it for the last few years, have a bunch of agents across the country seeing success with it. So we'd be remiss not to kind of bring it to the rest of our agents and tell you guys, hey, we have this. If you're interested in investing some money back into your business, and you're somebody who's doing annuities, or I would say someone who has some familiarity with annuities, and you're really looking to sort of take it to the next level, this may be the ticket for you. It's not cheap, so that's kind of why I said that. It's definitely not the cheapest lead effort that you could do. If you're looking for some nice quick hits, maybe a final expense lead effort would be a better thing to do. These type of leads take longer to cultivate sometimes, and the leads themselves are more expensive. But we will co-op the cost of this with you. So if this is something you're interested in, let me know. We can talk about the pricing. There's different options you can do with the different companies. Like, you have to kind of make a commitment with them to do so much per month, for example. So it's kind of, the pricing is something we could sort of another discussion, but we will pay for some of that. We co-op the cost of lead efforts with our agents, marketing efforts with our agents, and we kind of do that on a case-by-case basis, individual basis. But we're always open to discussions about that. We'll pitch in to pay for some of the marketing if it's something that makes sense. And there's also an optional appointment setting service with this that works with both of these lead companies. There's two specific lead companies, and they tag team with a awesome appointment setting service. And so you can utilize that or not. We've had some agents that worked these annuity leads, didn't have as much success, added the appointment setters, and it was a game changer. I have other agents that, have somebody that they work with that can set the appointments, or they'd rather set the appointments themselves. And that's totally up to you. But those are options available, and some of the, as I said, really some of the best things that we've seen as far as annuity prospecting goes. Also, the seminars are something that really works with annuities. We have people that love doing seminars, and that's all they do. And then we have other folks that just say, don't ever talk to me about a seminar. So if it's not your cup of tea, you can tune me out. But if it is, let us know. We have a couple different third-party companies we work with on the seminars that are awesome. They do everything from start to finish. They have turnkey systems. You can do whatever kind of presentation you want. Social Security, Medicare, LTC, retirement in general. They'll do social media marketing for you. They'll put together the invitations, the whole thing. So presentation's already put together, if I didn't already say that. You don't have to reinvent the wheel and figure out what to say. So if you're interested in doing a seminar, give me a call. Let us know how we can help you guys grow your business. that's really the goal that we have here at Pinnacle. We want to, try to make everybody as successful as possible, make your life easier. And so if you want to partner with us on annuities, on all this retirement stuff, maybe annuities could be your next adventure to sort of wade that retirement storm. So as I mentioned, we'll help you with illustrations, product selection, training on these annuities, answer all your questions, get you geared up so that you can go out and make a sale right away. So we talked about the full service business processing and the lead co-ops, of course. So if there are any questions, I'm kind of looking here. It doesn't look like I have any. There's a couple of questions on the lead programs, which I always get. So you know what? Those kind of look like individual questions. So I'll reach out to the folks that had the annuity questions offline, and we'll reach out to everybody as well, just to check to see if you had any additional questions or anything else that you wanted a finer point on. But in the meantime, if there's anything that you guys need, if there was clients, prospects that came to mind through the presentation, let me know. I will happily help you build the case, see if an annuity is right for those folks, and or maybe another product that we offer. So again, my name is Josh Horton. You see my direct extension there. I'm your sales director for everything life, annuity, long-term care related here at Pinnacle. So definitely give me a call. Let me know what I can do to help. We'd love to hear from you real soon and hopefully help you grow your business moving forward here in 2019. Thanks again, everybody, for your time. Hope you found it well spent, and we will look forward to speaking with you real soon. Have a great day.